Hey everyone, welcome back to Corporate Decoder, the place where we decode the money secrets of the business world. And let me tell you, LiquidValue Development Inc. has got some serious numbers for us to unpack here. Today it looks like they are pivoting hard, and we need to see if that pivot is going to pay off or if it's going to send them spinning out of control. Alright, so we're diving into LiquidValue Development Inc. RSS quarterly report. This is the filing that tells us how the company is doing financially quarter by quarter. Now, according to this report, as of June 30, 2025, the company had cash in the bank of over $3 million. That's up from about $2.7 million at the end of the previous year. So they're holding on to a bit more cash, which is generally a good sign. Let's peek at their balance sheet for a second. Total assets went from about 38.7 million at the end of 2024 down to 36.8 million, a slight decrease there. Now, liabilities also went down from almost 3 million to just over 2 million. This is good. A company with fewer liabilities generally has less financial risk. Okay, digging into the equity section, something interesting here. Retained earnings dropped from almost 2 million at the start of the year to just over 1 million by June. This tells us the company is losing money right now, and that loss is eating into their accumulated profits. And the statement of operations confirms it. They reported a net loss of about $265,000 for the 3 months ending in June. This is compared to a loss of roughly $291,000 in the same period last year. So the losses are actually a little bit smaller, which is a small positive sign. Now look at the revenue numbers for the 3-month period. They brought in just $66,602. Compare that to over $2,900 in the prior year. And for the 6-month period, the revenue dropped from over $5 million to a mere $1,781. This is a massive drop, and the report says it's because they sold off their remaining lots in their real estate projects last year. With that massive dip in revenue, their cost of revenue also fell from over 4.7 million to about 1.2 million for the 6-month period. They also saw their gross margin on their model homes go from a decent 56% to a negative 25%. This means they are losing money on each dollar of revenue from these rentals currently. General and administrative expenses went up for the 6-month period to over 1.2 million from about 83,000 last year. The company is blaming this on increased bonuses and professional fees. So it seems they are spending more on running the business even as revenue shrinks. This section here is quite a roller coaster. In the 3 months ending June 2025, they had an expense of over $93,000 compared to income of over $22,000 the prior year. This is largely due to reclassifying a customer refund that they had to pay back. So when you put it all together, for the first 6 months of the year, they now have a net loss of close to $1 million. This is a huge swing from the same period last year when they actually had a net income of over $8,000. They are clearly in a much tougher financial spot this year. Looking at the statement of stockholders' equity, we can see the impact of these losses. The retained earnings have deteriorated significantly, which reflects the mounting losses over time. Interestingly, their common stock value pretty much stayed the same at around $74,000. This is the par value of the stock, and it doesn't fluctuate daily like market prices. Their additional paid-in capital remains steady at over $33 million, meaning they haven't issued a lot of new stock recently that would affect this number. The non-controlling interests, which is the share of ownership held by others in their subsidiaries, went down slightly from about 6,000. This minor change suggests not much has shifted in the ownership structure of their smaller operations. Now for the cash flow statement. This is where we see the actual cash generated or consumed by the business. For the 6 months ending June 2025, they used over $1.3 million in cash from operations. The sale of their properties last year provided that cash influx. In investing activities, they actually got $1.7 million back from a related party loan repayment. This is a positive cash flow event, but last year they barely spent anything on investing activities, only $232. It was a wash. For financing activities, there was no activity cash-wise in the first half of 2025 compared to last year, where they borrowed and repaid over $3 million in related party loans. The management discussion section really confirms what the numbers are showing. The company has sold off its main revenue generating assets, the land projects, and is now relying on rental income from just 2 homes, which is clearly not enough to sustain them. They've even flagged that this situation raises substantial doubt about their ability to keep operating as a going concern. But here's where it gets really interesting. They've entered into a major acquisition agreement with something called Winning Group. This involves a massive stock issuance where Winning Group will end up owning 80% of LiquidValue Development Inc. Winning Group is a Hong Kong-based food and beverage brand known for its noodle shops Wing Nine. On top of that, they also did a contribution agreement where they transferred ownership of Alset eHome Inc., the subsidiary that holds most of their assets, to another subsidiary called Alset Real Estate Holdings, to their existing stockholders. This sounds like a restructuring attempt to separate the real estate business, perhaps before or after the Winning Group deal. Remember that Alset Inc. is an indirect owner and has provided a letter of financial support. They've committed to providing any needed funding for the next 12 months. This support is crucial given the current financial state and the mention of doubt about continuing as a going concern. As of August 11, 2025, they have over 700 out there. This is a lot of shares, and it's important because of the upcoming stock issuance in the Winning Group acquisition. So what's the story here? LiquidValue Development Inc. is in a very transitional phase. They sold their core real estate development business and are now left with minimal operations, essentially just a couple of rental homes. The company is losing money and is dependent on financial support from its parent company Alset Inc. to survive. The planned acquisition by Winning Group and the internal restructuring involving Alset Real Estate Holdings are massive strategic moves. This looks like a complete pivot away from real estate and into the food and beverage sector, the future of LiquidValue Development Inc. As we knew, it seems to be ending and a new company might be emerging. The biggest risk here is whether this new direction can actually generate profits and stabilize the company. The drop in revenue and cost of revenue alongside the negative gross margin on rental properties paint a grim picture of the current real estate business. The success now hinges entirely on this acquisition and how well Winning Group performs. Looking at it from a practical standpoint, the company is struggling financially. Its core business is gone and it's bleeding cash. The new acquisition could be a lifeline, but it's also a massive undertaking that introduces a whole new industry and a dominant new owner. Without more detailed financials on Winning Group, it's hard to say if this is a smart move or a Hail Mary. We need to watch closely to see how this acquisition plays out. And if the new management can turn around the financial performance, any further dilution of existing shareholders through stock issuance or changes in the business model will be critical to monitor. All right, that's our breakdown of LiquidValue Development's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.